Welcome to the Eltropy Exchange podcast, where leaders of community financial institutions connect, learn, and stay ahead. In each episode, we sit down with industry executives, innovators, and experts for candid conversations about the challenges and opportunities shaping CFIs today. At Eltropy, we believe conversations matter. Let's dive in.
Welcome back, everyone, to the Eltropy Exchange. My name is Mike Pupil, and today we've got an incredible podcast that is lined up. And so on the screen today, you are seeing Mr. Brian Waldron, and it's going to be a pleasure to introduce you. So thank you for carving out some time.
Oh, no worries. Happy to be here. Thank you so much.
Amazing. For those that are watching, those that are listening, Brian Waldron is the president and CEO of Dort Financial, a $2.3 billion credit union in Grand Blanc, Michigan. And Brian joined Dort back in March of 2022 from Hudson Valley, a $7 billion credit union located in Poughkeepsie, New York, where he was serving as the CLO, Senior Vice President of Lending for that organization. Previous to that, I think you were the Chief Lending Officer for Scott Credit Union out in Edwardsville, Illinois. More than 20 years of professional lending and operational experience in the credit union industry, and you've dedicated your career to the credit union mission of people helping people, which is what we're going to be diving into today. Passionate about fueling growth of credit unions and the movement, investing in employees, which is where you were most recently speaking at the Eltropy Leadership event. And you've been invited to a number of different events. In fact, following that one, I think you were speaking at a different event. So NAFCU, Qlytics, Acuma, Mortgage Coach, Tumblr, all of the above, and probably many, many more. Currently residing in in Clarksville, Michigan, I believe, with your wife, 3 boys, 4 dogs. You enjoy boating, spending time on Lake Michigan, and traveling in your spare time, which boggles my mind that you actually have spare time, Brian.
There's not that much of it.
So now that we have the official corporate introduction out of the way, man, I've been looking forward to this and chatting with you. We've had a lot of fun over the last little bit since we've known each other. So welcome again. Thank you for being here.
Oh, thanks for having me. I look forward to it. This is going to be a lot of fun.
Absolutely. Well, Brian, I start all of these conversations with the same question for the group because I find it incredibly fun, which is, tell me how you got started in the credit union industry. What was the journey?
This is a really awesome story. So I attended Miami University in Oxford, Ohio, and I was walking across campus one day and saw a sign that said, join the all-student run credit union, First Miami Student and Alumni Federal Credit Union. And so I was kind of a freshman and thought, well, okay, let's see what this is going to do. And so I showed up to the meeting, met a lot of fun people, and literally this credit union was very, very small, less than $1 million in assets, but it was all student run. So you had to do a teller shift to start, and then you could grow into different positions throughout your time there. But even the CEO was a student, typically a junior or senior. But I actually met Tim Mislansky, who now runs Wright Pat Credit Union at the time. He was there as the professional oversight, so he would come in once or twice a week, kind of just look over the numbers, make sure the students weren't doing anything too bad. He offered me an internship at the credit union, Chaco Credit Union, over the summer. And so I took him up on that. And really, that's just how the career started and how it just kept forming and connecting with people and just kept going on to the next spot. So it was really just a stroll across campus one day.
It's amazing. The reason why I love this question is I have yet to speak to somebody, and I can't wait. I'm going to throw the challenge out there, that somebody grew up with the idea premeditated that they were going to jump into the industry in the role that they're in. It's amazing how everybody just kind of finds us just by accident and then completely falls in love. And then the career trajectory just takes off. And like you say, one role down to the next. And I don't think it's stopping anytime soon. Correct me if I'm wrong.
No, not at all. And, it's funny you say that because my aspirations when I was a kid, it started as a doctor when I was in kindergarten, then an attorney. And then when I went to school, it was international business. I had these dreams of living in New York or Chicago, flying all over the world, doing business. And so I make the joke with my wife that, I met her at Miami as well. So between her and the credit union space, It's pretty much kept me here in the States, except for when I travel. But yeah, it's just a fun career. I can't believe what it's turned into. I can't believe the amount of blessings that I've had in seeing people achieve their goals and employees achieve their goals. But, I never thought, even when I started this career right out of college, I never thought it would lead to what it is today. And so I feel an amazing amount of blessings. And, I thank all the people I've met along the way in this industry, not only in the, who work at a credit union, but the salespeople, the anyone who helps a credit union or looks out for them. It's just been an awesome, awesome career.
For those listening or watching, I got to tell you firsthand, every word of what you just said is incredibly sincere. And I think that the tonality, like it needs to be emphasized, like exclamation point at the end of your sentence. Most recently, you spoke at Eltropy's leadership conference out in Wyoming, and you were talking, and the topic that you had was really about the employees, right? Taking care of the employees. Before we jump into that topic, I'd just love to know, what was the biggest influence that you had that kind of led you down this path? Because it is a unique one. I think everybody recognizes that employees are always, the heart of, any organization. I've also heard on the financial side, it's also the biggest expense of an organization.
Yeah.
But that's where the investment really has to come through. And so the sincerity of the comment of how you see that gratitude, et cetera, like, where does that come from? Where was the influence on you that spawned?
I think there are several moments of inflection where that comes into play, but I can start with, I was at a smaller credit union in Ohio, and some of these I won't name names of where I was at the time, but at one point we decided that we had to lay off some employees, and I never will forget the feeling of sitting across the desk from an employee and saying, "You don't have a job tomorrow," and nothing. It's not because of anything you did. It's just because we, don't have the position anymore, and that was a really, really tough thing to do. So that was one point. I think another point was at another credit union I was at, we had a lot of fun, and then, something tragic happened in the balance sheet, and suddenly that fun turns into, an oh crap moment overnight. I'll be nice on the podcast and use my words carefully. And so you have that moment. And then, I worked at another credit union where they were heavily invested in member service. And I'll never forget this story. I was at one of their branches, and a member came in, and it was raining outside, and he took the keys and he dropped them on the concierge desk and said, "It's raining outside, so I need you to valet park my car because I don't want to get wet. And if you don't, I'll mark you down on your MPS." And from those moments kind of all adding together, I kind of decided that if I ever got the opportunity to be a CEO and lead a group of employees, that I would really focus on employee well-being, and focus on the leadership and employee engagement, and kind of that emerging leaders program where you can train people to have the next career opportunity. And I would really focus on that. And my belief in that is, if I'm doing the best for the employees, right, and the employees have a great place to work, they enjoy where they come every day, and they get to see the benefits of what the efforts they're putting in. So, for example, if they're taking extra time and they're going through an emerging leaders program, or they're taking the extra time and they're learning about lending, even though they're on the teller side, that they get the opportunity to be promoted. And if it's not at our credit union, that they're getting a promotion somewhere else in the credit union space. And I'm just as happy for them as I am if they're internally. But I thought, that will be the focus. And my guess is that it will turn into great member service. And so far, that premonition or that guess has turned out very well for me. So it was kind of a roll the dice and see what happens. But it's turned out incredibly well.
Bold request to have the car parked. I don't know if I would have been as calm with that piece. And I'm sure you're probably toning it down a little bit. I love it.
I might have stood up and had an interaction with the member, and but I was very polite about it. But I'm just that's not what we do. That's not how this works, etc.
Yeah. I think, there is a lesson to be had with that, right? I think, there is a difference between managers, leaders. Leaders really don't try to manage the group. You're supposed to have employees in your care, and you're
That's right.
supposed to be, they're under your protection, so to speak. And with that, the only way that it works is if there is communication that is very healthy. There has to be honesty in the communication that takes place, transparency in order to develop that relationship. You talk a lot about, having that direct approach and creating trust, accountability,
Mhm.
and working together as a team, a true team. You've also mentioned before to me personally, you've said, I don't hide from anything as a leader. Talk a little bit about your approach in terms of transparency and creating that trust so that there is an environment that when these scenarios happen, employees don't get nervous to voice if you haven't witnessed it, but feel, open to communicate with you that now there is somebody that is looking out for them. And so I'd love to get your thoughts there.
Yeah, the great example I have is, just yesterday, and I have a blog here at the credit union, and it's, ask the CEO, and you can ask anything, right? And just the other day, I had a question come in that says, and it was more of a comment, right? We're feeling more bankish. I've worked for a community bank, or I've worked for a large bank, and we're starting to feel that way. And so later on in the afternoon, I had a president's advisory council where I have employees come from all over the credit union. We meet, we have lunch, we kind of talk about some things. And I asked the question, I said, are we operating like a bank? And they're like, well, and they're pretty honest with me, right? They're like, well, we do have some goals that, seem salesy, and we do some of this, and we're, doing some outbound calling. And I started going through the financials, right? And I started showing them, okay, here's our gross income. Here's our expenses. Here's our dividend expense, right? And here's our net income. And one of the employees used to work for the bank that we acquired about a year and a half ago. And I said, if I was a bank CEO and I was giving this bottom line to investors, would this work for the investors? And he said, absolutely not. And I said, so therefore we're not operating like a bank, right? Because I'm making a lot of gross income, but I'm giving it back to the community in so many different ways. And here's how I do that. And it was kind of an eye-opening moment. And, then we started chatting about, well, why do people feel like it's a bank, right? And, employees said, well, I heard from an underwriter that they can't make the loan decision, that they've had a member who's, applied for a loan and they used to get the loan and now they can't get the loan, even though they paid every loan back. And I just looked at him, and I'm a pretty candid person, as you know. And I just said, can I be candid for a minute? Can I be like really candid with you? And all the employers are like, yeah, please do it. They love it when I have these candid moments. And I'm like, that's bullshit. I'm like, any employee that tells you they do not have the empowered ability to make a decision is absolutely wrong. We have guidelines for underwriting, but we do not say you cannot approve a loan unless, of course, the member is actively delinquent or has a charge off, and we're working through that process. But there's nothing in writing that says you can't do that. Now, and a manager may not like your decision, but if you have the ability to say, this is why I did it, we're okay with that. And I said, so these are the stories that you need to share again. When an employee is saying something to you, you have the ability to say, I don't think that's accurate, right? And change the conversation. And so I'm, again, empowering employees to do that. But I'm also big on accountability, right? So you have to tell that story. You have to be honest with that story. For any of my former employees that are listening to this podcast, which I hope there's not too many because they're probably laughing, they'll also say, yeah, Brian says a great deal about how fun it is to work for him, and that's accurate, but he has very, very high expectations, right? And I'll never forget, I was in a meeting. It was not at Dort Financial. I was in a meeting. I had my marketing team. I had all my lending teams with us, and marketing was kind of going through their plan for the year. And two of my marketing people were just not on the same page. And at one moment, I stood up and I said, okay, we're going to stop this meeting. It's clear that this is not, you are not prepared, and that's fine. I'm going to give you time to go back to your offices and prepare for this meeting, and we'll reschedule and come back. But this is a waste of everyone's time in the room. And so having that very direct approach, right? One, told people that, it's not acceptable not to be prepared. And two, he's going to give us a second chance. And actually, I probably saved the meeting in its entirety because they came back 2 weeks later and they were prepared, and it was a great meeting. But I have those moments, right? And so people do kind of laugh at them. But, I think that having the accountability, being transparent with your employees, it's not always fun. And when I say employee engagement, and I think I said this at the Eltropy conference when I was talking, it's not about jeans days and pizza parties and having fun all the time. It's not a Zappos environment, right? We're not decorating our cubicles crazy and having that kind of fun. But it is about being respectful. It is about knowing the employees who you work with and what you do with them every day, and having a very respectful environment that has high expectations. But we will have some fun along the way. But it's not focus on fun. It's focused on getting the job done and succeeding together. And what I find is that employees really value that.
100%. I think that's the balance that has to take place, right? Like everybody wants to create a happy environment. Happy employee equals a productive employee, that tagline that everybody puts in. I believe it. I think most people do. If you're in a good mood, you kind of want to jump into some of the projects.
Yeah.
So that leads to my piece of, as you're hiring, that comes as a cultural decision as an organization.
Yeah.
And it has to be the teammates that you're bringing on board. So what do you look for, in that team member approach when you're hiring or you're coaching, willingness to accept feedback and coaching? Not everybody is willing to accept. I think most people get defensive as soon as you start to offer some advice or some coaching areas. Walk me through a little bit about your mantra as to how you created that as an organizational structure.
Yeah. So, for me, it starts at the very top, right? So if I'm looking at my executive team, I have to be open and honest with them. And so we do have the same one-on-ones that we expect our managers to have with their employees. Every week, I am meeting with my team one-on-one and as a group, and they understand how I operate. Right now, I was very blessed. I was able to bring in 2 employees that I worked with in the past, right? And I think the best question that some of the current executive team asked one of the new executives that came in is, well, you've worked for Brian before. How is he to work for? And her response was very simple. And she said, Brian will give you enough rope to do whatever you need to get done, and he'll let you fall off the cliff, but he will always pull you back up if you have problems. Right. And that's exactly how I feel about it, because I will give you that ability, right? You don't need to come to me for everything. I do not want to micromanage. I'm not very good at it. Right. But if you come to me and have a problem, I will help you fix it all day long. And that's kind of my mantra. And so we study that all the way down. Study's not the right word. We implore that all the way through the organization, right? Empower your staff to make those decisions, waive the fee, make the loan, do these things. And so when we're interviewing, we're talking about empowerment. We're talking about, hey, Michael, how, when you're with a member, how are you interacting with them? And if a member comes with this one, this scenario, what is your response? And we listen for that. And if you're saying things like, go ask your manager, we're trying to change that conversation to, you have the ability to do that, right? You can make that decision. And so we're doing that right away. The other thing too, during the hiring process is, we want feedback from employees. So we do stay interviews, we do exit interviews. I didn't pull them out, but I have 2 binders, the big binders that you can buy at Walmart, this size. And when we do our employee engagement survey, I have 2 binders that are printed out with all of the data, and I spend hours going through every data point, every comment, every score that I can find, trying to understand what the employees are saying. And then what I do is I take that data, I meet with my executive team, and then we decide on the top 3 things that we can fix that year. Look, there's 25 comments of things that we need to improve on, and we know that, and we share that with the employees, but we pick 3. And so again, we use that mantra in the interview process, right? You can't fix everything overnight. So if you were going to improve your skill sets, what are the top 3 things you can do? What can you focus on today that's going to improve tomorrow, right? Baby steps along the way. We try and ask the question of, what do you want to do next? Right? You may be interviewing for an MSR position, but what do you want to do next so that our training team can provide you the resources to go out there and learn? We have a lot of self-learning attributes that you can go in, log in online and go through a lending class and learn how to underwrite or learn how to process. So we spend a lot of time focusing on that employee right from the moment we're talking to them and saying, how can we make your experience here better?
Yeah. And I think the perfect piece that you said a little bit earlier was, we're going to spend time with the employees. We're going to train you up. And whether it is, growth within the credit union or they move on to another credit union.
Right.
And certainly you've had that experience, and they've probably also come back over the period of time that you've had.
Yeah.
You know, I think most organizations, most managers are scared about that, right?
Yeah.
You have a performing employee and you kind of want to hold on to it because it's doing well for your department, or it's doing well for your group. Terrible leadership, but
Terrible.
managerial, you can draw the lines between each other. Like, you can see the reason why somebody would do that.
Yeah.
I'm sure you've probably come across that before. I've certainly experienced it in my career. I hope to God anybody listening to this, I didn't make them feel that way.
Yeah. I'm sure I made that mistake early on in my career. I mean, I can't think of a specific example, but I do remember, like, a manager leaving. I thought, oh my gosh, it's the end of the world, right? Like, what in the hell am I going to do now? And you find a way, you move on. And, I always say that it's a way to improve the position because you can bring in someone even better than the last person. And that's not a slam against the previous employee. What I'm saying is this person might have been promoted to that position or been in that position, and now we need a different skill set over the next 2 years that they have not been quite prepared for, and that's the new skill set I can bring on. And so there's always an opportunity to improve, but I really believe in celebrating employee promotions, and we do it internally. We celebrate when an employee gets promoted. We had, I think 78% of our promotions last year were from an internal candidate. That's an awesome statistic, right?
Yeah.
And we also celebrate when those employees get to leave to go do something special. I tell my executive team, look, if you want to be a CEO, I have an obligation to prepare you for that. So
Right.
we give them training classes. I help them. I provide them opportunities for coaching and leadership, and we give them that opportunity so that they can go out in an interview and be a CEO somewhere. And I think that's okay. And in fact, I think that's awesome when that happens. I will use this name. I worked for Mary Madden. She was at Hudson Valley Credit Union. She was an amazing leader to work for in many aspects. And she had, I believe I was her 6th CEO that she had kind of groomed and created. And
Wow.
they went on somewhere else. And every time that happened, she celebrated. And I remember going into her office and I was telling her what I was doing and I was leaving. And I mean, she was like exuberant, right? Like, she was excited for me. She was excited for herself because that was like another good thing in her career moment that she was able to say, right? And that, that's another reason, that's another place I learned that lesson, and we all went out to dinner as an executive team and, we made a lot of jokes of all the great things we'd done over the last 5 years. And they made fun of me for all the silly things I did in the office or, the mistake or two I made. Don't tell too many people because now it's on public address. But, I mean, we had a lot of fun and we celebrate those moments and, we still communicate with each other, all of us. And now Mary's since retired. But that was kind of like her last moment of, hey, I got to create one more CEO or help groom that next CEO. And we do. And this is, I will say this. I know I can get a little off topic sometimes, but here's what I will say. I think as an industry, we are really lacking that ability of training and creating the next set of leadership. And, I think it's really easy to sit in the CEO desk, and credit unions, once they hit about $1 billion, $2 billion, it can be very just self-drive, right? Here, we're on cruise control for the rest of my career, and we kind of leave that out. And we don't prepare the next generation. And I think we're doing ourselves a huge disservice with that. And so we should celebrate those wins, and we should be spending money on training and creating that next set of leadership, because doesn't it just help our industry? And if we're helping our industry, aren't we helping ourselves? So yes, I may be spending X thousands of dollars to train the next leader here at the credit union to be a CEO somewhere else. But that's not money Dort Financial is losing. That's money we're putting back into the industry, and we have that obligation.
I could not agree more. I think that especially with the average age of members today and the struggle to try to pull in younger generation to kind of fill the ranks of the older generation, unfortunately passing, which happens to everybody. It's the same thing, even in our work cycle. You get to the point of retirement and you move on. So first, shout out to Mary. What a wonderful display of leadership. I hope she gets to hear this and she gets the shout out. That is the difference between, big sports guy. And so that's the difference between the individual players looking for the individual accolades,
right,
the team players that take a pay cut or just want the team and you want the win and try to make those around you better.
That's right.
It is so much more satisfying lifting up that championship trophy than it is, the individual accolade. And so
That's
how
right.
many greats are there that have never lifted up the team trophy versus the individual one?
Yep.
No disrespect to some of those that were team players that never got there. It does take a team.
Hey, it does take everyone on the team. And let's be honest,
Yeah.
it doesn't always happen.
You mentioned something earlier, and I think this leads to the strategic growth of Dort, because Dort has seen some terrific growth as well under your stewardship. And you mentioned before that you bought a bank.
Yeah.
Now, walk me through that strategic move for those that may not know or didn't see, the announcement. What was the idea behind it, and the strategy that you were thinking of?
Yeah. So for us, I will say this. So again, I'm going to go back to my days in New York, because I think that's, kind of where this started. Is I was in charge of creating their mergers and acquisition strategy. Now, even though I was there and in charge of that strategy, we never got to the point of actually merging a credit union or acquiring a bank. However, they have since. So I'd like to say I played a small role, but I won't tell the new CEO that, because he'll just roll his eyes and laugh at me. But when I came to Dort, I really took the time to look over the board's strategic plan, right? All of the comments they were able to make in the plan, the way it was written up. And one of the things that they said was, maybe we'll have in 10 years, we'll have branches in Florida. Now, it's not unheard of in the state of Michigan to have a credit union branch in Florida, right? We see several credit unions down there, and I kind of refer to it as the Michigan Triangle. And so typically you buy your house, and I hold up the Michigan, here, but you buy your house and you're kind of in the Detroit, Lansing area, and then you go up north somewhere, right? And then you buy a house in Florida. Like, it just happens. Every Michigander, it seems like a big majority of people do that here in Michigan. So I call it kind of the Michigan Triangle. But I was reading the strategic plan and I thought, okay, well, that's interesting, right? So I reached out to a couple of my contacts and they said, hey, if you find the right organization and if it makes sense for Dort Financial, just reach out to me. Give me an opportunity to look at it, right? I was CEO for probably, 7 or 8 months. And they called me, some of my industry contacts called me with this opportunity. And I started looking at the documents and started looking at the financials and kind of digging through, and even pulled my CFO in and said, look, I'm not the smartest guy when it comes to numbers, but you're better at this than me. What does this look like to you? And we started to get really excited, right? Like, this looks really good. And so we went to the board, right? So here I am, new CEO. Walking into a board meeting and say, hey, we need to go into executive session and I want to present something to you. Nice. I thought, okay, this is one of those career moments. They could walk me out the door after this meeting and say, you're crazy and that's not what we hired. Or they could say, hey, this is really awesome, right? Now, like any good board should, they had some questions. They had some trepidation, but they said, hey, we trust you. Keep going forward and keep us updated. And that was the best response they could have given me, right? And so we went down the path and we pulled in other industry experts and we ran more financials and we ran kind of an acquisition strategy and we did our due diligence and everything made sense. And so we went ahead and we closed on the deal. We received 4 branches in the state of Florida in the West Palm area, which actually was a really good move for us. There's not that many credit unions in that area. So it's not like we were going down there and competing with other Michigan credit unions or other credit unions that were, plentiful. Whereas on the west side of Florida, there is a lot. So we're on the east side over there in West Palm. And it just has been a phenomenal acquisition for us. The team that we acquired has been great. We're so excited for them. They added some expertise in our commercial area, although we were already very strong. They added a secondary layer. We are now overlaying consumer expertise in their kind of neck of the woods. And so the way the two teams kind of melded together has been awesome. Now, I realize that doesn't happen in every acquisition. So this is just one of those unicorns that did occur, but we kind of felt this all the way through. Right. And so it was great. So when once we closed and we celebrated and then we did the system conversion, we've just been moving forward ever since and we've been really happy with it.
There's a ton of M&A that's happening right
Yeah.
now, and your history coming back from M&A, from prior organizations. What advice would you give? Because I think that there is the idea, and we were speaking about this at the conference, the idea of bigs getting together with bigs and the decrease of credit unions as a whole. But this is credit union acquiring bank, and so what advice would you give to other credit unions about M&A? Because it felt like you just kept your eyes open and possibilities,
Yeah.
to be evaluated.
Well, this is what I say. Every credit union, whether you're big or small, should have an M&A strategy, right? And this should include your negotiables and your non-negotiables. So, for example, at Dort Financial, our non-negotiables are we will be the survivor, right? So that's just our non-negotiable. So if we're going into a conversation and the strategy is going a different way, we're not going to continue the conversation. We're going to cut it off very quickly, right? We know this. Another non-negotiable for us is that, the amount of board seats we're willing to give up in a credit union merger. And so again, if they want, 3, 5, 7 seats, that's not going to happen, right? We know what our non-negotiables are, and we stand very firm on those. And so it can make a very easy conversation. But, the key is to always just be active. Like, don't just sit by passively and hope it's going to happen, but you got to be active. You got to reach out to people. You got to have conversations, but don't, I'm not advocating that a CEO knock on another credit union's door and say, hey, do you want to merge? Like, that's not a great conversation. But what you can do is, this is a people helping people industry, and we know that credit unions help each other. And so be helpful and reach out across the aisle and say, hey, what do you need help with? You need help in your commercial lending? Hey, I'm happy to do that for you. Let me see what we can work out here. And the idea is that when something does come about where a merger is a great opportunity or the next strategic move, you're the first in line to have that conversation. So don't knock on doors. Don't be like, hey, it's you I want. That's kind of creepy dating, right? Like you don't want that. But, just be open to it and have conversations, know what your non-negotiables are, know what your negotiables are, and stand firm on all of those and have the conversation, right?
Yeah, and I feel like that the credit union has been rewarded. The board, certainly their trust in your direction has been. It has extended the presence of Dort, and you are an incredibly strong advocate for community presence.
Yeah.
And so, how is that received to the members, locally now that you are in a completely different state? And I imagine it's a good one. I'm sure you have a lot of snowbirds that come winter time, that's exactly where they want to go. And, how is that received by the membership?
Yeah, overall, it's been kind of quiet on the membership front. And part of that is we actually went into a market where our members don't snowbird. Now, we did studies, right? So we know that we have some members down there, but we actually went on the opposite side of the state. Now, what that could lead to is we could grow over to the other side of the state very easily, and we know the connectors, right? But, membership has been overall very positive, the feedback that I have received. But, I think here's the thing about members, right? And I don't say this lightly, and I'm not trying to be, I'm not being mean about it, but members don't care. What they care about is their accounts and their loans and their ability to do financial transactions, right? They care about themselves. And so if you do it the right way and you kind of lean in and you're providing the best member service, you're not going to hear negative feedback, right? And so now listen, if I wasn't providing good member service in Michigan and suddenly I'm buying a bank, they're going to go, what the hell are you doing? Right? Like you don't even have your shit together here in Michigan. How could you do this? But they're not doing that because we do provide the best member service and we do provide financial opportunities for them to grow. But I want to hit on what you said about community service, and I want to talk about that for one moment. So again, I want to derail the conversation, which I'm really good at, as you know.
I love it.
I think it's so important to be involved in your community. So again, I'm going to start when I came on board the credit union. We had this long-winded mission statement. We want to be the number one financial blah, 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 and more blah, blah. So what I did is I went with the board and I said, we need to make this simple. What do we ultimately want to do? Because everybody who's in a bank or credit union wants to be the best financial products and services. And it came down to we want to enrich lives. Awesome. Whose lives do we want to enrich? We want to enrich members, communities, and employees. That's it. Very simple. Dort Financial Credit Union wants to enrich lives, employees, members, and communities. And so we focus on, again, we go back to the employee focus, but we're focused on that community involvement too. I don't care if you're a member of the credit union. Of course, I want you to be a member of the credit union, but I want you to see that we support the things that you want us to in your community, right? Isn't that what a credit union's about, being present in that community? And so if you drive up and down the highway, there are a lot of credit unions in Michigan. We are one of the most saturated credit union states in the United States. So I'm driving up and down the highway, and every credit union's advertising a rate, a checking account, a credit card. It's noise. And so we changed our whole marketing style to a branding. Now we do have some product specific marketing out there, but we changed it to a branding. And what we did is we focused on that community effort, right? We took our employees, we created a volunteer incentive program. So our employees are out there volunteering at the Humane Society, at the soup kitchen. They're doing this on their own time. I had one employee who donated almost an additional 2 weeks of work outside of her work day during the last year. It's amazing. She brought her family and friends along. I think one thing, she even brought her dog along. I mean, so, it's a family affair. And so now we can say that our employees gave back 2,500 hours, right?
Yeah.
And that means something, right? And so we don't just put a dollar amount to it because, we give money, but we also have our employees who are buying into that. So now I have employees who are buying into work, right? They're coming in, they're loving life, they're seeing the membership. And now it's between 6 and 9 at night, and on the weekends they're volunteering their time, and they're saying how awesome it is to be out there, and people are seeing them, their members are seeing them, the community is seeing them. And so we've really turned it into enriching lives. And so we are truly living our mission statement.
I fundamentally believe this. So I got the opportunity to my first foray into credit unions, as you know, and everybody I think kind of realizes this now. I'm from Montreal, Canada. So our banking system is very, very different. But I got a little taste of the credit union, industry back in 2016, 17 with electronic signature.
Yeah.
And I think I told this joke at the event where, I got heavy pushback from credit unions where it's like, there's this great new technology. All you have to do is just touch your phone and, there's a signature. And I got the pushback of, how dare you? We want members to come into the branch. We want them to sign to have that experience. And today, every single person, when I ask that question, who here uses electronic signature, the entire room raises up their hand. Now, to bring it back to what it is that you're saying, I agree with you. It has nothing to do with the rate, in fact, right? Like people will give away. And the perfect proof, and I'll give 2 proof points. One is the proliferation of payday lenders. They've exploded. And so right there tells you I'm willing to pay 500, 600% instead of the 10 that would be probably offered at a credit union, right? The second one, I just did this at America's Credit Union in Kentucky. I asked the group and was talking on collections and the rates. And they had an economist that got up there and talking about, the job market, the performance of portfolios. And he had all these graphs. Good speaker, a lot of data.
Yeah.
I only remember about 2% of it. And one of the things that he said is that, the reason why credit unions portfolios tend to have, lower levels of delinquencies is because of the rates. And my jaw just dropped. And so I get up on stage, and I hope he's not angry with me. But before I even introduced myself, I said, I got to capitalize on this because I'm going to forget it. I said, please raise your hand if you have an indirect portfolio in the room. And like 80% of the hands went up.
Sure.
And I said, keep those hands up if that is part of your portfolio that is performing the worst. And not a single hand went down. And I said, it's the same rate as your direct members. And so why would it be not performing? The reason is the relationship, right? And so to your point, not that you don't care that there's a member, it's the brand that you're building in the community, that if now somebody goes in and you have that indirect, who the credit union is. I think, part of it is to give back to the community and to fill the mission of the credit union. But a lot of it is to say, hey, we actually care. We care about your financial well-being. And this is why we're reinvesting to lower the rate. We could charge you more. We could charge you a ludicrous amount and you'd still take it, but we don't because we care about you. So I don't know if you agree with that piece. I mean, you can talk a little bit about how you handle that from the Dort side, but I certainly see that from, bird's eye view, so to speak.
Yeah, I do agree. And what I will say is this. I think, I'll turn this into a whole other conversation that we could probably go off on a tangent about. But I will say that by and large, I don't think people understand why a credit union exists or what the real difference is between a credit union and a bank. I mean, I think if I go out on the streets and I had a microphone and said, hey, I'll give you $1,000 if you can tell me the difference, I'm probably going to give away very few $1,000 prizes. I just am. I think what people do think is, though, if I go to my credit union, and a lot of people will say my credit union, I will get the best member service. And I know the tellers and I know the loan officers and I know the branch managers. And guess what? They know my name. And if something is going on in my life, they care. Now, I'm not saying if you work for Chase, you don't know your customer's name. And I'm not saying they don't know your name. Certainly, there are relationship builders out there. But by and large, as it continues to grow, you become more of a number and less of a person in those situations. And that's where I think collections comes into play. So I think when you call in or we call you because you're delinquent on a loan, we are there to help you. Of course, we want to get your payment, right? I mean, come on, we're collecting. We want to get that payment made, but we're going to work with you on how we get that payment made. Listen, I've made a mistake and I've missed a loan payment or a credit card payment once or twice in my life, and I've received that phone call and I'm usually like, oh, what the hell? But sometimes I'm like, let's see what happens, right? And I'll tell them a story about why I missed the payment, and they don't care. They don't try and help me. They're like, okay, well, you can pay next week. I'm like, well, I can pay right now, right? I just forgot. I'm busy. Like I forgot. But they don't try and help me, right? They don't care. And so that's where I think the credit unions really come into play, is how are we helping? I've heard it said, oh, you look like a bank, you operate like a bank, you have the same products and services as a bank. You're right. I'm not going to argue with that. You're right. It's how we care about you when you need us the most. And it's how we care about the community you live in that makes a big difference. There's a regional bank here in the area who I happen to know the regional vice president very, very well. We're friends, but they just closed their branches in the Flint market. And we are all in Flint, right? We know that demographic wants to come to a branch. Did I capitalize on it? Hell yeah, I did. I sent out postcards to everyone within a mile radius of that branch they were closing and said, hey, we used to have a branch right down the road, because people want to come in when they need us. But to your point, yeah, everything can be done on my phone. But if I need somebody, you better pick up the phone and you better be at the branch. And I've gone into bank branches with like, well, that person's not here today, or here's the number you got to go call. That's not why I walked in. I drove here specifically to get this taken care of. So again, it goes back to your employees wanting to fix the solutions and to be empowered to do so.
It totally makes sense. The two sides of that coin, when a member wants a car loan because they want to get a car, or mortgage because they want to buy a home, or credit card because they want to do something. It's amazing how easy the communication is because they want something. Yeah. And that the moment that it turns into the collections, it's incredible how less often they pick up the phone or respond to the communication, right? And that all speaks to the emotional side of things. And you have experience on the collection side. And I think empathy is the most important word, when it comes to collections. And to your point of actually caring, right? Figuring out what's going on. Most people I think get this, that if you are late on one bill, you're probably late on multiple. You just don't see it. And it's the blind spot that really kind of hurts, and those collectors that just don't care. And it's, so you're going to pay next week. Take a step back, figure out what's going on. There may be additional hardship that's in there, and the portfolio may explode, and you lose the opportunity to creating that relationship with an individual.
Yeah.
I think that's the mission that anybody who's gone through, something like that, bad things happen to good people, and or that turned around, quite a bit. Regardless of what it is that you think, I think the scoreboard in everybody's mind should be just do more good than bad.
Do more good than bad. Just within reason, right? Do more good than bad within reason. I'll tell you this joke, because I was in the collections industry, or in the collection side of things for a while. I actually managed a group of collections. And the joke with us was, I was not allowed to talk to any single mothers that were delinquent on loans, because I would give them whatever they wanted. You don't want to pay till it's January. You don't want to pay till December. That's fine. We'll fill out a form. We'll defer your loan. You only want to pay $5 a month. That's fine. So they said, Brian, no, you cannot talk to any single mothers anymore. And part of that is I had empathy, because I grew up in a home with a single mother until I was in 5th grade, right? I knew what that was like, where your mother was only working part-time and, was barely able to put food on the table. I lived it. And so I did have empathy, too much empathy, but we had some fun with it. So my employees would just say, okay, this member you can't talk to anymore. Thanks so much. It's coming. They don't even get to you. They go to Rose, was my assistant manager at the time. They go to Rose and she will handle them.
Well, the definition is to understand and feel
That's
what
right.
the person is going
That's
through.
right. I do. Yep. $5 is fine with me on a $300 payment. I don't care.
Yeah, we're just going to postpone it for a year. You do you. Yeah, you know what? Yeah, and they probably loved it, and they were fiercely loyal afterwards. I don't know financially if it's the right move, but I'm sure
some
they probably
were. Some probably took advantage, but yeah, I know it was great, and the employees were great. Like you have to have fun with it, right? Because I didn't realize what I was doing. It just was. It was a secondary reaction, right? Kind of subconscious. And when I got called out on it, I laughed about it. I'm like, oh, well, you're probably right. Right.
Yeah.
So
exactly. Well, Brian, I'd love to, close out, that this, as we're coming up on time, I want to make sure I let you get back there because God knows we've rescheduled this a couple of times. So we've been on your calendar a lot. And so I'd love to just maybe close out in terms of leading thoughts to other CEOs, other leaders, actionable guidance about navigating for things like growth, which you've been incredibly, good at doing. There's a lot of uncertainty in the market. I think everybody's a little bit panicked, and it seems like it's getting crazier and crazier. Things like organizational change. What would you talk to if you were sitting down with other CEOs in credit unions? What are the hard truths that you would share?
Well, every credit union CEO should be doing yoga in the morning, right? Like it just calm your brain before you go to work. So that's number one. Like that's what I do every morning. But in all seriousness, I mean, I think you have to understand that calm. Like you have to create that calm too if it's not available to you. And there is a lot of craziness out there. And there is just a lot of noise out in this industry and mergers, and we're scared. And, are we going to survive? And, the banks are still coming for us, and taxation. And it goes on and on and on. And at the end of the day, you have to have your own house in order and create that calm, right? So think about how you live your life, right? At the end of the day, you come home to a home, and that's kind of your sanctuary, right? Because of all the noise that you deal with all day. But you have to create that sanctuary at work for yourself and for your employees. Get the noise out of there. Be transparent. Talk about the noise. Talk about a plan. Create those plans. Share those plans. Come together as a group. Enjoy what you're doing. But create that space at work to have those conversations, but also to create that calm environment. Yes, we're going to get crazy. Yes, things aren't always going to go our way. Right now, I'm in a liquidity crisis, right? And I've been talking about deposits and deposits and deposits for months, right? And I do get crazy in my executive team meeting, and I feel like people aren't listening, although I know they are. And so I just keep saying the same thing like a broken record, like we need deposits, but I don't want to do a certificate special. We need to get core dollars in here. And we are doing it, right? The data shows us we're doing it, right? Just not fast enough. So, we just keep talking, and we keep creating, and we keep doing new things, and we keep trying something different. And, and if we fail at it, we reset and do something else. But create the calm, create that ability to make a mistake and come back and reset, right? It's all okay.
I love that. I love that approach first, because I think any decision made that's emotionally charged or like supercharged in terms of like hyperactivity tends to never be a good thing. But you mentioned something, reset and, kind of move forward. And so if that includes changing course, sometimes that's the hardest thing to do, right? When somebody bets on a strategy, you almost fiercely want to either get it successful or die trying. So how do you pivot and lead your team if ever you do reset, repivot, and point in a different direction? Because that is difficult.
Yeah. I do say as a CEO and as a leader, you need to have buy-in from the board, right? So we do have a strategic plan when we go through some of these things, and we do talk about, hey, what happens if we don't achieve? And what happens if we need to self-correct? And what happens if we need to change course? Because the reason we're afraid of failure is because we're afraid of being held accountable to that failure. Now, I'm not saying you shouldn't be held accountable. Like that's not what I'm saying. If you make a mistake big enough, there is accountability in everything we do. But if we're going down a strategic path, if we're sitting here today saying in 5 years we want to be here, and in 1 year we realize we're not going to be there, or we have the wrong plan in place to get there, we have to come back and reset. But the key is open and honest, truthful communication. Have that conversation with your next level up. I have to have that conversation with the board, right? I go into the board meetings and say, something's not right here. We need to reset, and I'll give a perfect example. So last year in 2024, no, I'm sorry. In 2020, it was in 2023 and 2024, we were in another liquidity crisis. We put a certificate special out there. These certificates were very, very expensive, and we didn't hit our ROA mark or ROA goal for the year. But I was honest with them. As soon as I knew we weren't going to hit it because of the dividend expense, I went into the board and said, hey, we're not going to hit this mark. Here's where I think we're going to project. I understand what our budget said. It's not going to happen. Here's why. Here's what we do. I'll take the hit on my review, right? I know I said I would do this, and I'm not going to achieve that. And they were very open to the conversation, and they understood. And I said I could stop lending. I could go down that path and still achieve my goals, but that's not the right thing to do for the credit union. And
Right.
so I was able to have that conversation. And, did it affect me negatively? Absolutely. Should it have? Absolutely. I told the board I would do X. I set an expectation and I didn't achieve that. But I was able to have that conversation with them, and they understood, and then it just eased everything. So my whole thing is there is accountability. You don't get a free pass, but you do
Right.
get a chance to make a mistake and move forward. I always tell people you don't get fired because of the first mistake you make most of the time. There are exceptions to every rule, but most of the time you don't get fired for the first mistake you make. You get fired for the third mistake, and typically it's because you didn't self-correct, right? It's because we had the conversation with you and you didn't change course, right? We gave you the opportunity to change course, sometimes ad nauseum.
Yeah.
So you have to have that conversation. You have to have multiple conversations. Be open to it. But be trustworthy, be transparent, be honest. Those are key words in communication. But don't be afraid to have those hard conversations.
I totally agree. I think also if you repeat the same mistake, you don't learn, or
Right.
you're too stubborn to do that. And of course, the first time blow-ups, if it's that severe, yeah, maybe.
Yeah.
But totally agree.
Well, the other thing too is don't be afraid to tell your leader that you don't have the information right now. Hey, let me get that and get back to you. I can always tell you, again, I remember I was working with a CEO, and another executive would go into the office and they would say something, and then suddenly I was being called into the office and like, is this true? And I'm like, I don't know the answer to that right now. I'll get back to you. Right. But I always got back, and I always came in with data, right? Data is king. So we didn't talk about too much about data, but data is always king. And, it's not that I'm trying to prove another person wrong. I'm just trying to say, this is why we did this, right? This is what we're doing. So, don't be afraid, but, also don't be afraid to go out on a ledge and make a bold move, right? Big dreams take bold moves. And that's a saying I live by. So I'll give you one more example of a bold move I did. And I almost lost my job on this, at least so I thought. So during COVID, we know real estate loans were like basically zero, right? You could get a mortgage for 2.5%. It was crazy out there. And, we were all remote, right? We were remote because, we couldn't be in the office in COVID. I was in New York at the time. And, I will say that as much as I enjoyed working for Mary, she was one of those CEOs that wanted people in the office. And if she hears this, I'm not telling anything I shouldn't. She wanted people back. And so we're calling people back. And my vice president of real estate is calling me. And she's like, Brian, I'm losing processors every day. And I said, where are they going? And she's like, they want the ability to work from home. They don't care about money. They want to work from home at least 2 or 3 days a week. And so I said, do it. Just send them home.
Really?
Yeah. This was against every actionable item I've been told by my CEO. Get people back in the office. I want everyone in the office. This is where we're going to work. This is our headquarters. I said, send them home. Get them out of here if we'll keep them. Now, was it the right move? Absolutely. Because if I lost about 2 more, I wasn't going to be able to do any real estate loans, right? I mean, seriously, it was getting bad. And so I made that decision. And I remember Mary calling me in. Did you tell our employees they could work from home? Yep, sure did. Here's why. Here's the data I have. I was losing this many people. This is what they were telling me. They could have gone here for more money, but they didn't. They just wanted the ability to work from home 2-3 days a week. It was the right decision. We agreed it was the right decision. We agreed on a different plan to bring them back as things kind of settled in and more people returned to the office. And that is happening across the country right now. But we agreed on a plan and we set that plan in motion. But it was a big, bold move. I mean, when she called me in, I thought, oh, here we go. I'm done.
Well, shout out again to Mary for not doing that.
Yeah, not firing me.
And maybe that's where also I'll give you enough rope to
Yeah.
do what you need to do. And if, you fall off the cliff, well, at least you got the rope to pull them back up.
It didn't. I mean, I brought in reinforcements with my HR person too. I made her come with me to the meeting.
Just in case.
Just in case. And we were both going to go down together.
Oh my God, that's awesome. Brian, one last question for you.
Absolutely.
This has been a blast. I love it. Every interaction that we have, my cheeks always end up being a little bit sore from smiling and laughing. Hey, where are you going to be next? I know the next couple of months are normally the busiest time of year, but are you hitting the road? Are you doing anything? Are you going to some conferences? Where can people see you?
If I actually am leaving on Sunday, I'm heading out to the Acuma conference. I'll be sitting on a panel with some really, really smart people. I don't know why they put me on the panel. I don't know if I'm just the dummy that gets to sit up there with the rest of them, talking about, real estate lending and how that's part of your community. And I'm really excited about that. And again, I'm probably more excited to be on stage with the likes of like Tim Mislansky and some other really great people throughout the industry. So I'll be there. And then, that's kind of it for me for conferences this year. But I will tell you, I'm very active on LinkedIn. I always answer the phone when someone calls. So if someone's hearing this and they want to ask a question or they just want to connect, please look me up on LinkedIn. I'm always happy to engage there. Some of my content is, sparks some controversy. Some of it, people relate to, but it's always fun to do and just be present. But, I really think we need to continue those big, bold moves and create those dreams for ourselves. So I'll be around. It may not be out and about, but I will be around. I choose to spend pretty much October, November, and December kind of in my own home, being present. I have 17-year-old twins that are seniors this year, and so while I'm very excited for the next step in life for me and for them, it is kind of that it's the year of last, which is really difficult. We're going to have our last homecoming, and so I'm just kind of soaking that all in. And, I'm going to say this. So if my son listens to this or gets a clip, he hears this. My one twin was a huge soccer player. And I spent my entire life as a father, like dedicated to his soccer career. I've flown to Nashville. I've gone to Philly. I've gone all over the state of New York. And this year he decided to retire from soccer. He did tear his ACL his junior year, and so that was tough for him to recover from. And he was very smart about it. And he said, "Dad," he goes, "I don't want anything to happen to me where I'm out again and another tear or something tragic, and I don't get to enjoy my senior year because I don't get this back." And I thought, okay, that was super cool. Like, right, that was a super intelligent, super adult moment. And so I am really spending the time just kind of soaking that in and just being present with my family. I do have a lot of travel too. We do have the Flagler Credit Union division of Dort Financial in Florida, as we talked about. We did partner with Florida Atlantic University, the naming rights on their stadium. So again, those big, bold moves. I'm not very well liked in the industry at times because I have stadium naming rights and I bought a bank, so I can be that bad person. But I'm happy to talk to anybody about it. Like, come at me. I will have a conversation with you. But I am going to be present down there for a couple of the games and just, enhancing that relationship. So just kind of, again, keeping my own house in order. And my cards in order for my own peace and tranquility. But I am practicing yoga every day, even on the road. To keep that calm. So, I would encourage everyone to, take that bold move, create that big dream, and live it. And if you need help along the way or you just want to talk it through, I'm always available to connect with me somehow.
Well, I think Acuma is incredibly lucky to have you on that panel. You are insanely humble. I think you are well deserved to be up on that panel with the smartest and the most strategic of thinkers. I think anybody listening or watching this will absolutely agree. Brian, it is exciting to have leaders like you drive this mission forward. I think everybody in this industry is dedicated wholeheartedly to the success of credit unions, and it is going to take a little bit of thinking outside of the box and some moves that are not traditional to the credit union industry in order to adapt and be able to fend off things like fintechs and all of the other things that are all coming after you guys. And it gives us an incredible sense of pride that you've carved out some time today to share your story. I want to personally thank you. I look forward to, our friendship lasting many years. I think we have fun and text messages going back and forth and things that we get to share. And I look forward to it every single time.
Oh, it's a blast. I appreciate it. Thank you so much. And you know what? I got to say, thank you for being humble about the schedule changes, because I know one or two of those were my fault. So you took it, but I know I'm guilty.
It's nerve-wracking and a little bit of the sweat on the brow. It's on my side of it because this is a favor to us, not the other way around.
I don't mind at all. I'm the king of schedule changes, so it's all good.
I love it. Thank you, Brian. And for those listening, join us next time for the Eltropy Exchange. This is Mike Pupil, joined by Brian Waldron, and we'll see you next time, guys. Thank you so much.
Thanks for listening to this episode of the Eltropy Exchange podcast. For more insights and resources, visit us at eltropy.com. We'll see you next time.